Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up with our euro currency analysis. So, as we said in the weekly report, we have come to the conclusion that market has bearish context, and it's logical to consider taking the short position on the euro currency on the daily chart. Hopefully, it should happen somewhere around 120 area, because it looks just perfect for taking the short positions. You can see here we have confidence resistance, and we have daily overbought. So this is perfect combination to make the riskless trade, or at least the trade with a very low risk level. Because with the placing stop slightly above this area, it will be almost guaranteed that you will get some pullback and turn this trade to the riskless by moving stops to the break-even. But the major problem here is that we are not sure that market definitely will hit this level, because it stands, well, relatively high out from this current situation around 1886 where price stands now, and price performance in general on the lower time frame doesn't look like thrusting action, so we don't have something that sort. And from that standpoint, it is difficult to count that, well, at least some questions stands that market really could reach this level. So what we're going to do in the current situation, so how we will manage our trading process. If you remember, in the weekend, we have started from the 30-minute chart, and we decided to move step by step for the whole upward retracement. Here exists important level that we set as the vital point, where we could turn from one scenario to another scenario of the retracement on the high degree, high time scale. Currently, this level stands at 1910, because we have started with this steep ABCD pattern, and we said, well, initially we consider 1910 as an area where theoretically might be not bad opportunity to take the short position. Since this will be agreement resistance, it's XOP with this initial ABC bottom pattern, and that creates an agreement with the fib level of the downward action. So you can see here this might be some retracement, and then theoretically we could get a re-establishing on the downward action. So this is the first level that we are watching for. Currently, market gradually is moving to it. It's really very nice. So OP has been hit, minor pullback retracement to the OP. Now market is coming higher, so next destination point is XOP. But at the same time, this level becomes some kind of the signal level. In the case of the upward breakout and upward continuation, we could say that on a daily chart, we could count on some stronger upward action, deeper retracement, and that probably will take the different shape. Particularly speaking, I suggest that it might be something like that. So this is for our time frame chart. It might be first market will reach neckline around 1970, then it might be retracement, and final destination somewhere into the 2050 area. It agrees with the confidence resistance on the daily chart. Theoretically, it might be straightforward action right to this resistance, but taking into consideration the pace of this upward action is not really very strong. So appearing on the hand shoulders looks more probable. The problem with this scenario, that why we can't trade it right now, so taking the long position, for example, and just trying to get the result on upward action right back to the 120, is just because we don't have sufficient context. Actually, all that we have currently is just divergence. Divergence on the follow time frame chart, on the hourly chart, but no other patterns have been formed that could lead you to just taking this opportunity and taking the position based on this pattern. Of course, you could try to take the long position with the stops just below this area, hoping that market later will form this pattern. But this will be more gambling rather than reasonable decision making based on some clear context, because in fact we do not have any clear context for taking the long position right now. So that's actually what we're going to do with this trading setup. First, we are watching for reaching this area, maybe we'll consider taking the short position here, depending on what we'll see there. Maybe some patterns will be formed. This is the first level where theoretical market could turn down again. Second, in the case of the upward breakout, and if market will not start downward direction right from here, we turn to the high time frame and start watching for this pattern, and first market return back to the 1975. So that's what we intend to do on euro currency in nearest time.